Now, the fire started at this residence, but it was a matter of time before the embers jumped across and burned 48 acres of dry brush.
Near Tower Line Road with the latest on road conditions. Eunice.
That's right, Katie. I'm able to stand on the eastbound lanes of Highway 58 because CHP has closed this one down.
To get a snapshot of what it's like to prepare for a wedding here in Korea, I decided to take one rainy day to walk in the shoes of a bride-to-be.
And while with this latest case, the awareness of intellectual property rights is on the rise, hagwons or academies we talk to say that obscure copyright laws make their position a challenging one too.
Yeah, Asia's equity markets took a beating this week on the back of oil prices extending their fall and uncertainties lingering on the trajectory of China's economy. It is being seen as President Xi Jinping's best opportunity to enact the reforms he's had his eyes on before he retires by 2022. Yep, you're absolutely right. Swiss voters will have their say this coming Sunday on whether their government should hand everyone a proposed monthly stipend of roughly $2,500 a month. Now, does this sound too good to be true? Take a look.
Would you want a guaranteed financial stipend every month with no strings attached? The question will be put to Swiss citizens this coming Sunday in the world's first ever referendum on universal basic income. The proposed sum is 2,500 Swiss francs every month, money the federal government would dole out to each of its citizens should the motion pass. The provocative idea of granting everyone a base income, whether working or not, can be traced back hundreds of years to the 15th century. It's come to light in Switzerland after campaigners concerned with a growing gap between the rich and poor collected the required 100,000 signatures in 2013 to put the petition to a vote. The cardboard robot-clad demonstrators in Geneva point to real concerns of the threat technology will have on jobs. And some believe a universal basic income is at least part of the solution to a new tech-reliant world. One such advocate is Andy Stern, a Columbia University senior fellow who once led a 2 million-strong U.S. labor union. He warns of the potential for the greatest disruption of jobs in the history of the world, as others are calling for leaders in government and businesses to get out front of properly preparing for the coming tech surge. Organizers at Basic Income Switzerland crowdfunded the largest poster in the world, a giant 8,000 square meter sign that reads, "What would you do if your income were taken care of?" They argue having a basic income will liberate businesses from being responsible for the livelihoods of their employees and afford individuals the time to find a job they enjoy or start a business of their own. The Swiss government, however, says the utopian initiative was not something that it can afford. Even if it scraps its existing welfare payments, it says it would need to find 25 billion Swiss francs a year, which would come by way of spending cuts and new taxes.
Right, Mark Zuckerberg's really come a long way since his Harvard dormitory days, hasn't he? As this latest report is showing that an internet company can indeed make some significant cash. At a time when even tech is struggling under global economic pressure, Facebook announced on Thursday it not only registered growth, but more than doubled its fourth quarter profits to the tune of $1.56 billion. Now, this does mark the 10th consecutive quarter Facebook has beat analyst expectations. The social media giant said it cranked up the number of ads by 29% in the October through December period, which helped drive that year-on-year growth. Now, get this, it said 80% of its ad revenue came from mobile users, as monthly active users rose 14%. And also, this is significant, the volume of video play amounted to 100 million hours a day. And this is seen as a move of Facebook trying to chase down YouTube in some respects.
Well, I think this is great news as we heard disappointing data coming out of tech giants like Samsung and Apple. So can we say we're seeing a start to an era where the growth is online?
Well, it certainly seems so at this point. And in fact, market watchers have even coined a term, an acronym for the most successful web entities. Let's go ahead and see how their stocks did over the course of last year. Now, as you can see, the stocks of FANG, that's Facebook, Amazon, Netflix, and Google, all registered gains last year. But if we look at Apple's, you see it in gray right there. Its performance actually dropped in value. Experts point to the flexibility of online companies driven by a great idea or a great need, not needing a lot of infrastructure or capital than, say, a manufacturing firm. Now, investors seem to love Facebook right now as its stock surged 15.5% on Thursday, bumping NASDAQ up to positive territory. It also bumped Mark Zuckerberg's net worth to $46 billion, making him the sixth wealthiest in the world. Not a bad way to start this year, notably as on Monday was his first day back at the office after that 3-month paternity leave, a decision that had also created a fair amount of buzz.
Wow, a 3-month paternity leave.
Yeah, and some people are joking that if this is what a paternity leave does for a company, maybe Maxima Zuckerberg should be looking at more siblings as well.
Yes, I think so too. Thank you so much for coming in today, Eunice.
You bet. Right, Morgan Stanley has said we could be seeing $20 to $25 oil simply on the strength of the U.S. dollar alone. And this is not just hurting investors. We're also seeing global companies make big decisions as business is moved out of the world's largest economy to other markets. Take a look.
24%. That's how much the U.S. dollar has climbed against major world currencies since March of 2014, when the U.S. Fed gave indications it would start considering raising interest rates. This according to local market researcher Investing.com. The impact of the strong dollar is uncontested, not only in market fluctuations, but in global business dealings as well. A strengthening dollar coupled with plummeting oil prices likely contributed to a surprise announcement on Thursday that the 24-hour news channel Al Jazeera would close its U.S. operations after pouring billions of dollars into the cable channel since its launch 2.5 years ago. The Qatari government-funded media group blamed an unsustainable business model in the U.S. media landscape. But just hours after that fateful memo, more memos popped up, this time at gas stations in Qatar, announcing pump prices would be raised by more than 30% starting midnight into Friday. Meanwhile, rising costs linked to the appreciating U.S. dollar have driven at least 2 multinational companies to make moves. Japan's Mitsubishi is set to end its U.S. assembly operations with the shutdown of its Illinois plant in May, where it had already halted assembling SUVs in November. U.S. conglomerate General Electric has shifted thousands of manufacturing jobs overseas to the likes of Canada, France, and China, following the closure of America's Export-Import Bank. UK bank HSBC has been contemplating moving its global headquarters to the U.S., but according to reports this week, that plan looks all but scrapped, possibly due to its heavy-handed tax regulations and the relatively small amount of business the multinational bank draws from the country. The bank is said to be looking at Hong Kong and Paris, if not staying in London altogether.
Yeah, you're absolutely right. If the U.S. Fed went a little bit to the right this week, then European banks are going to the left of that 0 point, quite literally. Now, this is not a case that is taught in your standard economics class, so we're going to rewind a little bit today and zone in on Europe's negative interest rate experiment. Take a look.
Economics 101. When the economy is down, central banks cut interest rates to compel money stashed away in savings accounts to flow again and pump up the tired economy. But what happens when policymakers are very close to 0%? Can they go negative? Economists thought no, but it's increasingly becoming a reality in central banks of Europe. Case in point, the European Central Bank on the 3rd of this month announced it would push its deposit rate 10 basis points deeper into negative territory to minus 0.3%. This means when the bloc's commercial banks store their excess cash with the ECB, not only do they not receive any interest, they have to pay the central bank interest of 0.3% of their deposit.
Today's decisions also reinforce the momentum of the euro area's economic recovery and strengthen its resilience against recent global economic shocks.
By penalizing banks, the idea is to stimulate lending and inject more cash into the market. It was a bizarre strategy the ECB first introduced in the summer of 2014. Coming before the Eurozone's quantitative easing program, it was a desperate move tried only 4 years after Europe's economy took a tailspin. Nobody knew how it would pan out, and there are strange things happening. In Denmark, starting in February, one private commercial bank began applying the same principle to its retail customers. For a deposit of $1,000, $5 would be chipped off as storage fee. On the other hand, floating-rate mortgages are handing home loan holders a bit of money, rather than requiring them to pay interest. And over in Switzerland, where the deposit rate has also been left at negative 0.75%, the country in April began issuing 10-year government bonds with a negative yield for the first time.